Hello everyone and welcome to another technical analysis webinar with Trevor Neil. Thank you all for joining us. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, you can ask them in the questions tab of your GoToWebinar control panel and I'll pass those over to him. And Trevor loves questions, so please feel free to ask any question that you'd like about trading. We remind you that this webinar we posted to our YouTube channel today, so if you'd like to watch it again, you can do so there. And we'd also love it if you subscribe to our channel and click on the bell to get notified. The webinar handouts can be downloaded from the handouts tab of the control panel. If you're having any problems locating or downloading them, please just let me know in the questions tab and I'll send you a link or I'll help you find them. The first is a guide to the different technical terms and indicators that Trevor uses during the webinar, and the second is a CFD guide which details all the wonderful products that we offer at FX Choice. If you're watching this on YouTube, these handouts will be available in the description box. Please just click show more and it'll bring up the links below. To introduce you our technical analyst today, Trevor has over 40 years experience as a technical analyst and trader and was global head of technical analysis at Bloomberg. So Trevor, without further ado, over to you.
Okay, thanks very much, Dan, and welcome everybody. And let me reiterate what Dan just said there. Any questions? I like questions, anything you want me to cover. I'm going to cover the currencies, of course, the cryptocurrencies, the precious metals, the crude oil, and stock indices, but anything that you say specific that you'd like me to cover, please do. And also, if you want me to expand on any technical points, please do as well. And last week we had some comments that people couldn't hear very well. Just could you send Dan a note to say that you can hear? I've got my microphone close to my face this time, and to make, hopefully you'll all hear clearly. All right, let us start with the relative rotation graph of the dollar, the G10 currencies against the dollar. Now, what we see here is a very dominant direction. Apart from Japanese yen, everything is heading southwest. The message of southwest, well, west means weakening against the dollar. In other words, the dollar strengthening, and south means with declining positive momentum. So the situation of dollar strength is the momentum of that is increasing in all things. The weakest is the pound, Norwegian crown, and the euro. Here they're on the left-hand side of 100, so they're on a one-week basis have underperformed. These are also weakening too, so the Swiss franc, Swedish crown, and the New Zealand dollar. Everything is weakening. Some are more weak already than others. But the Japanese yen here is not. It's staying really where it's been, more or less. It's been around here for a few weeks here, so close to the dollar, so but a little bit behind it there. It was, remember, before, right over here. Right, so let's see how that translates into the absolute charts. First of all, starting with the euro. Remember, the euro was weak and losing momentum, and here it is, weak and losing momentum. We've got this downward wave pattern here, breaking down last week, and here is the picture of it: high, lower high, lower high. I talked about this back in August. The head and shoulders top here seemed mad at the time to suggest the break of the neckline, which we broke, then retraced back inside, and that was a very difficult moment, then turned back outside, then broke this low, and it really does now look like a head and shoulders. And the count from the head to the neckline, if you count down from the break point to here, is 111. So that's a long-term target, obviously, but it does look like we're headed towards 111, where we do pick up a lot of prior 2019, 2020 support. The MACD on a weekly basis is negative, on the daily basis is also negative. In the short term, we're pushing down, no immediate short-term significant support, lots and lots of resistance from the 115.50 level. This area in here is significant resistance, but the indicators are all pointing downwards. The trend is strengthening. The RSI is weak. The MACD is weak as well. So all it points to continued weakness of the euro. Looking to the pound sterling. Again, let's start with a weekly chart here. We're in the same boat here, but we're moving down a channel. But this is unlike the euro is close to support. So this weakness here, I think, is going to lose momentum, and it's going to start to move around on the ROT and be a relative better performer. And so I think this is a reluctant participant in this sell-off. We'll come back to support at 133, very, very important level. I mean, we haven't quite reached it yet, but from between here and 133 is a very important support level for pound, which I do feel is quite likely to hold. So this one hasn't got, you know, the space below it to continue. So as an opportunity of shorting versus the dollar, this is at least less attractive, certainly, than the pound. Now let's look at a couple of the commodity currencies. First of all, the Australian dollar. And so here, this is the US dollar, Canadian dollar this way around. So rising here is weakening Canadian dollar. Canadian dollar is weakening. The US dollar is rising. And this is continuing here. We've got resistance. Let's show you on the weekly chart. We've got resistance really around 126, but a big block of resistance here, which is going to make this dollar rally, and weakness is again, this is one which is about to hit its head, you know, like sterling is as well. So not so much free area for it to move, dollar to move up and the Canadian dollar to move down. So again, this is one that I don't think is a great one to participate in the dollar strength, you know, to choosing which to participate, you know, where to put your money. Let's look at the Japanese yen. Now, remember, the Japanese yen was out on its own up on the northeast, but here it's got a very, very important chart. This is why it's stuck really with the US dollar, you know, stuck there with the US dollar, moving with the US dollar itself. And here it is. It's picked up. It's hesitating. This is a weekly chart, a long-term chart. But let me bring in here. Why this level is so important. Look at these highs here, all around 113. 1, 2, 3, 4, 5, 6, now 7. All these years later, from 2018 to 2021, we come back to the very same level, and we're stuck there. Now, previously, although 7 times, the dollar has been rebuffed here, gone down, and the yen has gone up. Is it going to be the case this time? Or not? Well, we would look at the daily chart in order to get a clue to that. And actually, I don't think we have got a clue. It's looking like it's going to continue to hesitate at this very, very important level. So it's churning around there. It's in a relatively wide range. The breakout point is through this high here, but we would want to see, being as it's such an important multi-year high, we'd like to see a very powerful break, big candle, you know, finishing near the high. All these very strong technical messages, rather than just tickling through the level itself. There'll be, you know, there are going to be a lot of stops in there, and so high potential for a false break. People know that, they'll be gunning for those stops. You know, that's, of course, they're going to do that. So at the moment, it looks as though it's going to continue to move sideways at this very, very important level. It's not ready yet to make the break, or yet again, for 8th time, I think it is, fail at this 113 level, 114 level. So pay attention to this. It's really something that may be a big thing for the end of the year, big move for the end of the year. And just to follow up on something we were talking about, somebody had asked previously, in case they're on the call today, the Canadian dollar, Japanese yen. So this is drifting here, is the Canadian dollar drifting against the steady yen. Don't forget, the yen is moving with the steady sterling, so that's not surprising to see that. So we are, now what's interesting about this, and I like a lot, and I think this is what the person was alluding to, was we have had this rise in the Canadian dollar versus the Japanese yen. We broke up, made a new high when we broke through, let's call it 90 or 91, and then it broke up powerfully, and now it's drifted back to that level. And I think I'm watching very closely that the market may stabilize here and turn back up again, and the Canadian dollar start to move up against the yen, and that would go with the Canadian dollar US dollar story as well. So watch for a change in trend here. And then also the same really message from the New Zealand dollar, Japanese yen as well. Here we broke it up, so let's take that off here. We broke up 80 is the level here. This is the weekly chart. We broke up powerfully, pushed ahead. Now we've retraced to 80, back to 80. This is a very, very good place for the market to stabilize, and the weakness in New Zealand dollar versus Japanese yen to reverse, and it start to strengthen again. So watch carefully right here this week, possibly, that this drifting pattern turns into a rising pattern. Okay, I've done with the currencies, so I'm moving now to the cryptocurrencies. Just checking with you, any questions?
We do, but for metals, so we can get round to it when you get there.
All right, let's start with the relative rotation graph of the Bitcoin and the Litecoin and the Ethereum. You can see that those three are all on the right of the US dollar, so they're outperforming the US dollar. Most notably, the Litecoin, it's got a lot of catching up to do. It's way, way below its all-time high, whereas the other ones are at their all-time highs and churning around at their all-time highs. So there's a little slingshot effect of catch-up going here. It's heading northeast, so it's in east means it's improving against the dollar. North means with positive momentum. Ethereum is outperforming the US dollar, but is losing upside momentum, and Bitcoin is just standing where it's still a little bit outperforming the US dollar. So let's start with Bitcoin, a little bit outperforming the US dollar, and oops, and here we are, and here's Bitcoin. So here it's flat, just a little bit outperforming, steady, you could say, but the big picture really tells it all. I think we're actually on our way up. I know we're below, we're trading at this previous high here, but this was just a shadow. This was the resistance. It's now support. 60,000 is support. In my view, that was, if you like, the real high of Bitcoin, not the spike high, which was so brief. And we moved up, and we're pushing ahead. And I do think that this leg is continuing. The MACD is positive. The RSI is positive. If we look at the Fibonacci projection, A, B, C, D. So where are we headed on this leg? 8,400. So I think that we're on our way to that level, and it's looking steady at this point. So I know we're below the high, but the big picture of this is that it's broken really the significant high, which was only a spike. But the real consolidation high has been broken, 60,000 level, and we're above it, and I think we're pushing towards much higher numbers. I think is how we're going to end. Of course, those journeys are always difficult and not straight lines or anything like that, but it looks like it wants to go higher. Ethereum. So here's Ethereum. It's also going up. Let's look at the weekly chart of that and do the Fibonacci projection of that. Different sort of pattern here, but one thing is for sure, there's no disputing the fact that this has made its high through its high. The previous high in the case of Bitcoin was a consolidation. Here it was only a spike. This is always going to be easier one to break, although it did struggle here. Tested the high, pulled back, now made the break, and it seems to be on its way. The RSI is bullish, the MACD is bullish. On the daily chart, we're moving ahead in quite an orderly way. I think that's nice and constructive. Some slight weakness last week, but really the trend is still up. But what's interesting me so much is the count. So if we go from A, B, C, 100% here is at 4,900. Now we're close to that level. So we might be quite close to running out of steam in this one. unlike Bitcoin, which seems to it has got further to go before it runs out of steam from hitting its Fibonacci projection level. Now, Litecoin, very different. Big chart here. You know, it's not through its highs at all. It sold off the hardest of all of the three that we monitor, but it's pushing ahead. And a great week last week. However, it has come to the 100% level projection A, B, C, D. It's at that 288.85, so 290. We'll call it is the what the count from the impulse move here, and then subtracting the pullback move, and then adding the impulse move to takes us to there. Now it doesn't have to stop there. I put the 161.8% in there, and it depends how it behaves right now. My experience is that if we move decisively through the 100% without hesitation, too early to say that yet, then we do usually go to the 161.8% level. But if it's going to stop, this is a good place for it to stop. So is it going to stop, or is it on its way up? So here we have on the daily chart, we had last week's great move early in the week, and then we pull back a bit and then steadying up again. The indicators, in my opinion, trend is strengthening. The RSI is high, but it's going upwards. The momentum is increasing, and the MACD is going up too. I think that this looks set to go higher and go through that 100% level and extend up to the 161.8% level. You've got a good obvious place to stop if you were long of this below these lows here. Somewhere just below. Let's give it some room, 240. Okay, moving now on to the commodities. I'm going to do gold and silver and crude. Is there anything else, Dan, that I should be looking at?
Actually, well, 1 second, Trevor. Yeah, the question is about gold. Can I just read it out to you?
Yes.
Questions from Ray. Thank you very much for your question, Ray. Okay, this week gold broke through the trend line on the weekly chart to the upside. Do you think it's better to buy as soon as the end of the day price is above the trend line, or wait for a pullback, maybe touching the trend line again, which will provide a better buying opportunity in terms of risk reward? Thanks.
Yeah, okay, that's a good question, Ray. That's a really a good question, but also a difficult question to answer. I mean, you know, the reason you're asking it is it's the risk of missing it. On the other hand, the risk is you pay through the nose for it, and that's really what you're weighing up. Let's get the gold up, and let's just look at what Ray was talking about here. The weekly chart. Here's this downtrend line here. I made it dashed because they didn't line up perfectly like a trend line, but high, lower high, lower high. You know, it's here. But the action itself told you that the line was right. You know, it did something when it went through the line. Now, so Ray's question was, should you wait until the end of, let's say, the week before you actually buy it, or the end of the day before you buy it, or you wait for a pullback? Now, the risk of waiting for a pullback is, of course, there isn't one, because many times the most powerful moves have no pullback. You know, it's really changed direction and it's on its way. So it's a risky thing to do. Anecdotally, I would say that you get pullbacks about 40%. Now, is that enough odds for you to decide that it's better to wait and risk missing it? There's only a 40% chance. So, but on the other hand, if it does happen, then, you know, of course, we could be coming down here to 1830 or something like this, the break point, and you do get a second chance to buy at that break point. So this is really the dilemma that you've got. One solution is to decide you are bullish of the market, and then if you are able to divide your purchase up into parts, buy some now, and you might say, let's just round it out and say a third now. So let's say you're a 3-lot trader, then buy 1 lot here, and then as it starts to drift back, and if it comes back to the 833 area, buy the second one, and then if it starts to move up again from there, so it's pulled back and then completed the pullback and started to go up, then buy in the third one there. And if you've got a fourth one, go as it goes through the high there, because that's a very convinced point. But you should have a nice average well below the current levels if you do that. But your risk is that it doesn't pull back and you're only long of one instead of three. But so there is no, it's only an opinion really. What would you do? I tell you, but since you ask, I don't wait for the pullbacks. I just buy. So if it breaks it and breaks it in a emphatic way, clear way, I'll just buy it, and rather than risk missing it, because I have sat through things where this was a buy and then I hesitated. I ended up not being long, and that seems almost worse really than paying too much. Because after all, let's say you do pay too much and the market backs off, and then, but it is a good break, and we have a pullback, say down to 1833 area, and then it goes up again. What's the worst? You bought high, the market pulled back against you, but then it was a good buy because it goes through it. So, you know, in terms of getting it wrong, it's not a bad way to get it wrong. You weren't in profit straight away. So for me, I would rather balance that out by not wanting to miss the big move if it happens. It's also a simpler strategy because it, you know what to do. Whereas with the one with waiting for the pullback, you're trying to analyze the nature of the pullback and the behavior. Is it weak and so forth. You've got a lot of other decisions to make which you could get wrong. I hope that answers your question, Ray, but we've talked about this. I do think that this is an important break, and the next objective is for the move is 1900, where we pick up the resistance from last summer. On the daily chart, we're pushing ahead nicely here. The MACD is bullish, the RSI is bullish, the ADX is now moving up through 20, so confirming the presence of a trend here, supported at 18, this high here, but also the downtrend line, but the high of 1833 here if you need it. But I think that in general, I would be happy at being long and not to gamble that there's going to be a pullback. Might be wrong, might improve my overall average, to something like 40 if I wait a bit and trade really well on the dip on it. But on the other hand, if it's really going up, this is quite tinkering with the deck tiers on the Titanic, really there. I know all these things are very important. It's big money, of course it is. But if it's really going up, this trade is a big trade on the upside, and therefore anybody who would have bought it around here would be happy if we're trading $20, $30 higher than we are now. Okay, moving to the silver. And silver, we got, let's go to the weekly first. Silver, we broke through its resistance point here, and we are pulling back right now. So if you want to pull back, here it is. And it wasn't so expensive to wait here, or wasn't so expensive you paid up here. Resistances just below 27, much bigger resistances at 29 and up to 30, almost 30 here. It's I think this is looking good. We got the bullish divergence here, which did warn us that we were coming into a low, and then the MACD cross here. So for a late message, that also confirmed we were in a low. But this does look good. This and well supported. That's the other thing. We've been churning around for a while, and all those prices are below us now. So this does look pretty good. Before I leave the precious metal, just going back to the gold, really I want to make a strong point here. Gold versus the S&P. So this is just simply the price of gold divided by the S&P. And here we are right down here. Just make sure I got this. I'm sorry, it's not gold versus S&P, that's silver versus S&P. Let me go back. Okay. Gold, silver, sorry. Messing around here. Just bear with me 1 second. There we are, that's better. So this is the gold divided by the S&P. So going down is gold underperforming the S&P. And since the first quarter of last year, this has been a dominant trend, something I've talked about again and again and again. And it does look as though we're going back to one from the point where I started doing this measurement here. But as it happens, this one level is a very, very significant level. But it does look as though it's headed there. So given the choice, limited amount of equity and firepower of the two, the S&P is a much better investment bet. But gold is bullish and it can catch up. And that's not to say you can't trade gold, but let's say since for more than a year now, you've been better off simply sitting in the S&P and not really doing anything and not having any difficulty of trading and deciding whether there's a pullback or not. And it hardly has any pullbacks. Okay, now moving to the crude oil. There we are. So now here's a big problem for crude oil is the 2018 high. It's churning around above it. This line here is from 2018, from your lead contract of that time. Let me just show you it here. So imagine that we should come so precisely back to a level that was touched in 2018. So that was a magnet for it. We've got there, and now we're backing off from it. It's looking a bit heavy here. It gets support, funny enough, looking right back to 2018 at this 80 level here. We're approaching that, and we did bounce here on 3 weeks ago in it at that level, and that could be the level that holds us. But on the daily chart here, the 80 level is here, and it looks quite threatening and quite heavy. And I'm pretty worried about this. You know, we've high, you know, can't make a new high. That's very disappointing. Breaks the pattern of higher lows, the most recent one. It hasn't done it emphatically to turn it really into a bear trend, but it's looking heavy. You know, I've been so bullish of crude oil for so long. Now the action at the 2018 high is poor, and at the very least, I think the breakout is quite a way off. The break to the upside is quite a way off in terms of time, and we can ease back a bit more. So you know, I don't really respond to that. But for me, it's like I'm out of it actually now. So anyway, now moving finally to the stock market. Now we've seen the S&P, the US 500 is extremely strong. Here it is on weekly chart. I mean, look at this. Indeed, it's just amazing, isn't it? This big charge. We did have that seasonal weakness back in October that we kind of expected, and also in the third week of October, it stopped, and we're going now into the strongest period of the year seasonally. And doesn't it look like it is going to be the strongest period of the year, going strong right into the end of the year. This is seasonally the strongest move. So the biggest percentage increase is actually made in this period we're in now. We're well underway in that. It's looking very bullish. In the shorter term, on the daily chart, we've got a little bit of a pause here, but doesn't look serious, and that's because it's recovering pretty quickly. Maybe another one just like that one there. But the stronger of the two indices is the Tech 100. Here it is soaring away here, made more progress, had a bit more of a pullback, which is good, but it's turning positive again on the weekly MACD. I think this has had a pullback, cleared out a few week longs, and it's getting ready to have another strong week and an attack on the 16454 high here. So just continuing this rising zigzagging pattern. They're bullish. They're just remaining bullish, these two. But is there something more interesting? Do you want to buy something? Let's say, hopefully you're long, well invested, and you just every day look at your P&L getting bigger and bigger. But if you haven't bought or you're squared off or taking your profits, well, do you really want to buy into this strength? Is there something better to buy? Well, let's have a look at the FTSE. Wouldn't it be nice if it was the UK 100? So it is on the daily chart looking pretty good. But what always mesmerizes me is this great trading that took place between 2017 and 2019 before we plummeted, and we're pushed into that. It's going to be pretty hard, in my opinion, to make progress through that. It's doing a good job currently. I grant you, it's going up strong, and I'm pretty impressed. Since it broke through the 7,200, it's pushed ahead pretty strongly. But I do feel that this is going to get harder for it to keep on pushing upwards. But look at this. I think this is very interesting. And this is the German DE30. It is here. Now this one, let me just show you the weekly chart of this. Firstly, we have broken out to the upside here. We've had quite a big sell-off, correction back to 15,000, then up to 16,000, and where it got resistance, and it's broken the resistance now. It's a breakout. This is a breakout here, and here it is. Breakout is not the kind that I'd like to see that is accompanied by high volume, big white candles and so forth. It's a bit too orderly and composed breakout. The indicators are positive, and it does look like it's following through. So given the choice of all that's around in stock indices, this to me is the most attractive. We're closest to the breakout point, and that is therefore support for it. And we've got blue sky, deep blue sky above it. The US 500 has got deep blue sky above it, but no support. It's really, if it decided to go down, it could go down a lot. And, we could have one of those crashes or something from that. And same with the Tech 100. But here we are just breaking out and of a big consolidation. And we've had a powerful pullback, a clearing out of weak longs. And I think this is ready to make a fresh leg higher.
Okay, Trevor, can I just interrupt you?
Questions?
Oh, excuse me. Yeah, we do actually have some questions. We have a request from Roland. Thank you very much for your request, Roland. He asks if Trevor can take a look at Japan 225 and the Hang Seng Industrial. We don't actually offer this, but it might be interesting to take a look at.
Okay, I'll do it for you, Roland.
Japan 225.
So first of all, so at the end, here we are, 225. Let's go to the weekly chart, and here I want to bring in a lot more, really a lot more data. Excuse me if I go right back, because we've been here before, 2,900. But when was it? Yeah, it was here. It was back in the 90s. So this is where we are here. And I do think that above us, it's not blue sky, obviously, but we're here on this. This level here is a 33,000 is an objective, and then eventually, I think, 38,900, 40,000 again. So we're putting in a area here above support here, consolidation. I think that we're actually turning up, and this is going to break to the upside eventually. But we got a clear place where this will be. But two tops in place here. Isn't a double top, needs to break 27,000 to do that. But if we break here through the higher 30,795, 30,800, then I think that will release a lot of energy, and the journey will continue upwards. I mean, it's a long journey here, but we're going back, so decades ago levels, and I think this thing wants to head up to 40,000. And I said the beginning of this year, that I think this will be the market of the year, and it has been really the market of the year since March. And when I say the beginning of the mid-March, that this would continue upwards. And I think it's in a journey up. It isn't a straight journey up. And as long as it holds above 27,000, I think this has got a long way to go. So if you're in this one on a long time, I think you're doing well. So I need to, for the Hang Seng, I'll do it here, insert Pro. Bear with me a second. HSI index. Okay. It's not that I don't follow, it's just I have this list here, which is the ones that we talk about regularly. So here's the weekly chart of it. It's not been great. It's been dragged down a lot by the China index as well. High, lower high, lower high. Yeah, slightly higher lows pattern here. We've got support at 23,500. We've got resistance, I would say 26,200, and we're right in the middle of it now. The RSI is around about 50, neutral. The MACD is also neutral. I think this is neutral, and it's congesting, and it can break up or it can break down. We've got very clear levels where those levels are, but they're quite far away from us now. If we do break up, then I think we could shoot up to above 28,000 there. If we do break down, I think we've got several lows in place there to sort of catch the fall if it happens. I don't like this one. If you're asking my view about it, I think if you compare this to a chart like the German 30, for example, then there you're breaking to new highs. If you want to go where things are easy, where life is easy, then go. Don't try and make money out of something which is churning and ranging, and it's really quite far away from the breakout points. We're at a breakout point. We passed through it in German 30. I think it's looking potentially great there. This one, very difficult and potentially moving just sideways in a wide range. Probably not what you want to do, right?
Okay. Well.
Okay, Dan. Any other questions?
No, that's it. Thank you very much, Trevor, and thank you for attending, everyone. Please join us again the same time, same place next week, and don't forget that we're posting this webinar to our YouTube channel today. So if you came later and want to watch the beginning, you can do so there, or you can just watch a piece of it. And if you do go over there, don't forget to subscribe to our channel and click on the bell to get notified. Okay, anything else to add, Trevor?
No, thanks very much, everybody, for joining us today. Very interesting markets. Don't forget, this is sort of often a strong part of the year. Into the year, not just in stock indices, but some other markets too. So watch out for that. And thanks very much, Dan, for looking after us. Thanks for your questions. I appreciate that very much. And may the trend be with you.
And also with you, Trevor. Goodbye, everyone.
Bye-bye, everyone.